There are two major things going on right now in real time that could clearly push the market to the downside. I just want to be very clear. I'm talking about the short term, and they go by the names of the port strike in the east coast of the US and also what in the world is going down in the Middle East. Both of these things are giant unknowns. The market hates uncertainty, and depending on which way they do or don't break, it could be adding some downside bearish pressure once again in the short term. So I want to break down both of these events, and I also want to let you know what the big wigs on Wall Street are talking about, because these stories, these narratives are clearly going to be the driving factors in the short term for all of our degenerate zero DTE bets. So to start it off, here we have from Fundstrat, Tom Lee, and even though he's been very, very bullish, once again, he's doubling, tripling down on his short-term cautionary tales because of these two exact events.
People forget, I think, but your outlook and views are always nuanced to some extent, Tom. So last time you were on,
what a head of hair. Let's just admit
being
that.
Pretty bullish on small caps through the end of the year. I wouldn't say you didn't change that long-term view, but you did express some near-term caution. And these people want to know, the people that follow you, the people that watch Squawk Box, they want to know exactly what to do every minute of every day. So it looked to them like you had waffled on your long-term view. And you're going to say the same thing today. I think near-term, you acknowledge that there could be some bumpiness, choppiness, but by the end of the year, you think 6,000 on the S&P.
That's right. I think we're still in the midst of a very tricky period because we've got the election in less than 35 days. And now
November
we've got
5th.
Two things that investors don't know how to discount. One is, mounting tensions in the Middle East.
Yes.
And then a port strike that is potentially going to cripple the economy. And so I think that as investors worry about this, if we get a dip and a big dip, I think you still want to buy that dip because the setup into year end has a lot of tailwinds.
First of all, if you don't know Tom Lee from Fundstrat, he's been on a hot one for the past year or two. A lot of his call outs have come to fruition, which is why a lot of people give more credence to the words that he says. So basically, he's looking for a dip, and then he wants to buy heavy into said dip to see how we push to the remainder of the year. And I have to admit, I am in full agreement with him. So issue number one, Israel vows retaliation for massive Iranian missile attack. If you've been sleeping under a rock, you probably didn't realize the fact that, yes, the Middle East tensions are once again boiling over. Markets are in danger of being, quote unquote, whipsawed by Middle East conflict. So right now, the stock market is holding pretty close to an all-time high, but oil is shooting up because the region of the world that this is, not only are there like oil fields, but on top of it, just oil routes. So all of a sudden, if oil's not being drilled, if it's not being shipped, and the demand stays high, well, what do you think price does if supply is going down? It has to go up. And that's exactly why recently oil's popped from 66 to 72 a barrel. That's a big percentage in a very short time for oil. Now, obviously, if this continues as oil goes higher and higher and higher, think about what that does to generic supply chain issues. Well, it's going to make things more expensive. Shout out to public.com for sponsoring this portion of the video. If you're an options trader, planning on becoming one, or just generally interested in the markets, you're going to want to listen up. For those of you who don't know, public.com is my favorite place to trade options. If you're wondering why, the answer is simple. It's the most cost-effective place to trade options. In fact, you can earn a rebate on every options contract that you trade. That means that you get paid a rebate for each time you buy and each time you sell for each contract you're trading. I love it because it allows me to focus on my actual trading rather than the headache that is trading fees. Now, beyond options, public.com offers you an entire suite of tools. They offer exposure to stocks, options, bonds, crypto, and even have a high yield account that's currently sitting at 5.1%. With all of these offerings, no commission fees, and no per contract fees with options trading, I'm confident you'll enjoy public.com as much as I do. So if you want to check it out, go to public.com/Matt Kohrs or just click on the link in the description of the video. Thanks again to Public for partnering with us, the Goonie community. The other thing that can make things more expensive is the fact if they're not showing up in the United States. It is this strong strike that we are seeing by basically all of the East Coast ports where a lot of our goods are being shipped in, and basically what they're arguing for. And just to summarize it, and there's a lot of nuances to it, but this union of roughly 40,000 people, it's absolutely massive, and it is very impactful to the US and the global economy. Every single day it's shut down. It's estimated to be costing the economy $3 to $5 billion. Right now they are shut down because they want a pay increase, and they also basically want to say, hey, you have to admit that you're never going to go to automation. Now, to be clear, the West Coast of the US and other major port areas such as China, they're already on automation because it's clearly the smart technological thing to do. Now, just so you guys know, if you look at the average pay and also their medical benefits, on average, these 40,000 union members, they're getting over 6 figures a year. It's not like they're getting paid scraps. The average person between their actual pay and their benefits is getting over $100,000 a year. And the dude who is arguing for all this, who you're about to hear some pretty horrific things, basically he's saying he's willing to crash the US economy. He's making about $1 million. So this is Harold, the dockmaster dude who kind of heads the entire union.
Are you worried that this
They had the
strike,
capital to settle this thing.
are you worried that this strike is going to hurt the everyday American, the farmers that need to reach the export market? They're
Listen,
telling me that they're going to hurt through
Now
all
you
of
start
this.
to realize who the longshoremen are, right?
Nobody cares.
People never gave a about us until now, when they finally realized that the chain is being broke now. Cars won't come in. Food won't come in. Clothing won't come in. You know how many people depend on our jobs? Half the world. And it's time for them and time for Washington to put so much pressure on them to take care of us, because we took care of them. And we're here 135 years and brought them where they are today, and they don't want to share. And I'm done.
This dude makes over roughly $1 million a year, earned 728 last year, plus another 173 as president. Are you kidding me? He is more than willing to crash the economy for all of us, even though the average person is already getting over 6 figures when you include benefits, and they rejected a 50% pay increase. That was already offered to them, and they said, no, go kick rocks.
These people today don't know what a strike is.
Right.
When my men hit the streets, from Maine to Texas, every single port, a lockdown. You know what's gonna happen? I'll tell you. First week, be all over the news every night, boom, boom. Second week, guys who sell cars can't sell cars because the cars ain't coming in off the ships. They get laid off. Third week, malls start closing down. They can't get the goods from China. They can't sell clothes. They can't do this. Everything in the United States comes on a ship. They go out of business. Construction workers get laid off because the materials aren't coming in. The steel's not coming in. The lumber's not coming in. They lose their job. Everybody's hating the longshoremen now because now they realize how important our jobs are. Now I have the president screaming at me, I'm putting a Taft-Hartley on you. Go ahead. Taft-Hartley means I have to go back to work for 90 days. That's a cooling off period. Do you think when I go back for 90 days, those men are going to go to work on that pier? It's going to cost the company's money to pay their salaries. Well, they went from 30 moves an hour maybe to 8. They're going to be like this. Who's going to win here in the long run? You're better off sitting down and let's get a contract and let's move on with this world. And in today's world, I'll cripple you.
Do you realize how nefarious that is for him to fully understand that he's going to be negatively impacting all of us? And he's speaking from a point as if they're not even willing to negotiate. I want to be very clear. They offered a 50% pay increase that was denied. And the average union member is already making over 6 figures a year. At first, when I heard about this story, I was on the side of the union. I was like, yeah, they deserve their fair pay. I was assuming that they were getting like pennies and like they were getting horrible work environments and all that type of stuff. It is the opposite from the truth, the complete opposite of the truth. So anyway, you got to pay attention to this because it is going to cost the economy $3 to $5 billion a day, and it's going to pick up exponentially the longer it plays out. So you pair this with the fact that we have tensions boiling over in the Middle East, and we also have the uncertainty of the upcoming election. So this month of October, with these two major things, and then plus also the election, they could add a lot of frothiness, and they're already adding a lot of uncertainty to the market. So just be careful. And obviously, maybe it's a good time to add a little bit of hedging to your portfolio. So I just want to put that out there. I want to add some context. I want to add some facts, and I just want to let you know what in the world is going on.